Alright, so this is a 4 hour time frame on NASDAQ. And just looking at it, I'm looking for highs and lows. You can see that this one is up here. That's a high. It breaks these previous lows. Technically here it breaks it and it starts creating more of this. So it moves. Now this is your lower high. This is your lower low. Same concept, it breaks here. So you just move them. Now you have this. This is your next set of highs. This is the low point, and it breaks there. So I'm gonna get rid of these just to keep it clean. Turn off the SMA. So this is the area we're working in right here. This is your high, this is your low. It breaks there, but we're not worried about that right now. I'm looking at it more so for this, because I pull the fibs out as soon as I have that high and low point, just to see where price is expected to go to, which it did. And now, in theory, you wait for a pullback, and you look at previous price to kind of gauge where that pullback will be. So, just based off this being a little support area, I'm going to click it and see how it flows on this side. And it looks pretty decent. You have resistance, support, support, resistance again. So that's a decent area to look for. I'm going to drag it down just a little bit so it kind of touches more of these points here. But now with the moving average, I'm looking for, okay, price is generally under it here. So when it comes into this area, it's touching this moving average, which acts as the trend line. It's a dynamic trend line. And then when you really pull your trend line out as well, you can kind of find places to connect it. This one works. But if you wanted something tighter, let's see what this one does. Bum, bum, bum. This crosses the trend line here. It still goes above this area to create another high point, but it never breaks this previous, like your initial high point. It's testing it and it doesn't even touch it completely. But as soon as you see this push down breaks the structure here. You have the confirmation that you're already going downward and this trend line was broken. Not only was that first trend line broken, you're now underneath the moving average here. So you take, let me get rid of this fib, and that. This blue line was that support from back here. That was support and resistance all the way through. And you can see it's reacting to that right here, 100%. So, in theory, you could take a trade right here because you have enough confirmation. You know that you're going from high to low. It's retracing. You've passed the trend lines. You've already moved down. You've created a break of structure here, and now it's retesting this area. So, even in something like this, you can pull your fibs out on a smaller micro time frame, and you can see that you have this reacting as well with the 38. So your position in theory can be somewhere, once you get confirmation like this rejection candle, that's a decent one. So even if you got in just right there, well, your stop's above that, and then your ratio is, if not more than 1 to 3, you can bring it directly to this negative 23. And this coincidentally works. So that's one trade that you could have taken from that position. But the same concept applies throughout everything. If you were to see that your price, it worked its way down, but now you have that change of structure again. You have support building here, and then it continues upward and creates another support zone. So you've changed structure and you've gone into that upward momentum. You're still looking for sales as long as price never passes this high point. So you take your fibs, or not your fibs, your trend line, and you draw your way up. I'm going based off this one and this one. Once again, price is lower than the previous high here. So you wait for that confirmation. technically, if you really want to get technical, this created a small form of support in this area. So, same concept, you can pull your fibs out. Never mind, let's not do that. And I'm saying that because, yes, it did build support and it broke to the downside. So this is a very small micro change of structure here. Technically, it didn't break this low yet. But rinse and repeat. You have this high, this low breaking this trend line or this support and resistance zone. Breaks it, test it. You have a high point, your low point. It breaks that, and then it comes back up. It comes back up to retest. So let's pull the fibs from here to here instead. We'll take profit at the negative 23. And then you could go for the 61 because you're still actually aiming for this overall. You're not aiming for that small target on a big scale. You're aiming for this high point to this low point. So in theory, you're actually aiming for down here. So we're back in this. And this is where it really shows in detail. We went from, I want to say, an hourly time frame at first, where you saw that, down to a 15-minute. And now you can really see the changes in the break of structure here instead. You have this support that's broken. This support is broken. And then this looks like where it kind of forms its real support and resistance. And then as soon as you realize that, okay, we've broken that, price is going, it's testing it here, it doesn't actually break above. As soon as you get into this point where price is showing you that, all right, we're fucking moving, you know, you can put your position in. And realistically, if you're going for the big move, you have your stops above here just so you don't technically get wicked out here if price does move back upward. But if you have prices here, just to be safe, and you're going for that negative 23%, this is where it hits it. Of course, you can keep going. I mean, especially if price is not showing a difference in structure to the upside. Like every time here, let's see, this would have been scary. But if you move your profits to be in profit as soon as you got lower, you know, if your trade is 100% going to work because you moved your take profit to be in profit, you don't have anything to worry about here. So you can really let this fucking fly and do whatever it wants to do because you have no risk in this trade anymore. If price has moved all the way down here, chances are you're up like 400 or 500 just from this push alone. So if you can get that to be in profit and move your stop loss in profit, now you no longer worry about, fuck, am I going to lose money on this trade? Now it's more so you manage it and make sure that structure isn't changing. So here, you have this little support and resistance area. It kind of flows throughout, but you're already in profit. So if you did pull out down here and you saw it come up, you could have closed the trade 100%. But what if you watched it and realized that, all right, we're just consolidating a little from this high to this low here to this high, and every time it goes above, you have to make sure that price doesn't really break out above for this trade to be invalid. So here you get a test and price immediately comes back down. Here, nothing, it's just bouncing in this range. Same concept here, test, boom, instant push down. And then it comes down to this point where you come from this high to this low, and now it's reacting off that. Pull the fibs out. It's in a decent range here, but still, you're expecting price to keep moving, which it does. And what this does is it creates the opportunity to get into another trade to continue scaling. So if you go from this high to this low that broke the structure back in your favor, and you wait for that pullback wherever it may be, you can see the rejection candle here. You have one bullish candle that gets taken out and engulfs by this bearish candle. If you put another entry in right there, this time with your stops above the previous support, you now have 2 trades running in your favor again. And this one, like I said, this was probably like a $400 or $500 push. So in theory, you have about $700-800 in this entire green box, and then another 3, maybe 4 in this one area. But same concept. Like if you move your trade into the area where you have to take profit now, it's a risk-free trade, and you can really let these bitches just fucking flow. And remember, that's not the original take profit. You go back to the big hourly, 4 hour. And you go from here to here, and you mark your next 23%. So in theory, you have 2 trades running if you don't scale in for a third time somewhere in that area. I'm gonna clear. No, I'm not gonna do that yet. Let's see, here to there. Honestly, I didn't realize how big of a scale that is, because this is 4, but if you're doing futures, that's 4 times 4. So that whole fucking push is just ginormous. That'll probably be like a $12,000 trade total.